Today I'm going to talk about one of the worst stocks I have seen for a while, and the reason why I'm going to talk about this is because on Friday it had a massive dip. Because of that dip, a few people asked me, is this a good opportunity to go buy this stock? And at last I had a proper good look into it, and yeah, I'm going to share with you what I found, and it wasn't great from a fundamental point of view, and also some really dodgy stuff going on in the background. I'll mention all that for you guys today and share my thoughts on it. It's probably the worst stock I have seen for a long time. I don't know if it's as bad as the likes of Lordstown and Workhorse. Maybe not as bad as them two, but it gives it a good run for the money. Obviously, we know how it ended for Lordstown and Workhorse. Wasn't great. The management just got sketchier and sketchier with them two companies. And also, we know that a certain YouTuber as well that was connected with them stocks, how it ended for him as well. Yeah, they're not great companies. And there's some sort of things that I am seeing very similar with this company as well. Maybe not on the level what was happening with a Workhorse or a Lordstown Motors, but in particular this company has a few things going on that are a little bit worrying, and as well from a fundamental point it's not as bad as a Workhorse or a Lordstown, but it isn't great anyway. So yeah, I thought I'd share you my thoughts with you with what's going on in this company and everything like that. So hope it's useful. If it is, just hit that like button and we'll take a look. So this stock is the Very Good Food Company. So this company was founded in 2017, and like I said, the reason why a lot of people asked me about this is because it had a big massive dip on Friday. The dip was 21%, and yeah, obviously that's not great. It's 1/5 of your company basically going down in share price. It's not great, and yeah, I think a few people were attracted to that dip and what my thoughts were on it. If we just go down here onto the actual 1 year chart, you can see how horrible that has been for the company. You can see that there was a little spike up around about this December time, and since January time the stock has just lost a lot of value, 72%, absolutely terrible, and yeah, going even lower now. But yeah, it's just been on a massive downtrend. The company is currently valued at 216 million, and that's in Canadian dollars, just going to point that out there. But I guess the big question is, what was the drop? Well, the drop is that they were going to dilute shareholders. They were going to dilute shareholders by a massive amount, which isn't great. You can see here that they were going to offer 15 million units at $2 per unit, which is a massive drop from the current share price. And obviously people didn't take that very well, and that's why it sold off. You know, no one likes shareholders being diluted, and especially at how they managed to, what they were doing this dilution at as well. Definitely not good, and that's why the stock reacted massively badly to that news. Now you might be thinking, Jacob, that's not too bad, you know, dilution, sure, it might not be great, but is it the end of the world? Well, that's only the first point. This is where it even gets even worse for this company. If we take a look at some recent news, they actually just came out that they have announced plans to expand into China in 2022. Now, once again, you're probably looking at this and thinking, Jacob, expanding into China, it's a big industry. We've seen the potential rewards for a Beyond Meat that has recently started moving in there. Is that a bad move for this company? Well, let me show you something else. So you're thinking they're raising capital, diluted shareholders, okay, not probably brilliant. They're expanding to China, is that a bad thing? Maybe not, but let me show you something with the current company that I don't like. Now take a look at this. The company currently makes 8 million, and that's in Canadian dollars. 8 million. Yeah, that's correct. 8 million. That is it. That's all they make. Going back to the point, they are expanding into China. They are making a big move into China, and you think about the logistic and the supply chain pressures that will put on the company. Now, fair enough, if you're a Beyond Meat and you're a Beyond Meat that makes 450 million a year, maybe it's not too bad of a time to move into China. When you're a company that makes 8 million a year and then wanting to expand into China, what is the point? You're a company that makes 8 million. Only a year ago, this company didn't even make 1 million. Sure, it's a fair massive jump in revenue for the company so far, but that doesn't mean you go expand into China straight away. There is plenty of the US market that they are in to capitalize on. You do not go jump into every single country, because what that's going to do is that's going to cost you so much money, and especially when you're not even dominant in one country yet, only making 8 million is such a small amount. And the worst thing about this for the company is they currently lose 37 million a year. So you're thinking, okay, you've got to then go move into China. What's that going to do? Well, you're going to burn through a ton of money. What are they already doing? Burning through a ton of money. It just doesn't make sense. They currently make 8 million a year and then lose 37 million of it. That's awful. That is so bad. One of the worst financials that I've seen for a long time. And the problem is, it's just going to get worse. Sure, the revenue might look a little bit better as you carry on growing. I mean, it's not hard when it's 8 million. But the problem is they're just going to burn through more and more money. And then it goes back to the point of, well, what's the point of doing this? Raising capital here, and then all you're going to do is go burn through it again. It makes sense that you ramp up your revenue, and then you're not burning through as much money, hopefully. An absolutely bonkers decision. And this is where it gets even worse for the company. You look at what they're burning through 37 million. If we flick through to the balance sheet right now, they've only got 5.9 billion on the balance sheet. That's correct. They are burning through nearly 40 million and they've got 5 million on the balance sheet. Sure, that they've just raised a lot of money, but the thing is they've got 5 million cash there, 4 million in debt. But realistically, it's not going to go to expansion. It's not going to happen because they need money to expand, but the problem is they've got no money on the balance sheet because they're burning through so much money. If we go back here, they just look at this as they go on. The more this company makes, they burn through more and more money. And, every time they're burning through double what they're making revenue here. Same again, they're going through nearly double what they burn through again. So as this just keeps going up and up, if they make 16 million next year, what they're going to burn through, it's absolutely crazy. So what this company is doing is diluting shareholders, trying to expand when all they keep doing is losing more money every time they make more revenue. It's a horrible business model. And this is another crazy thing about this company, right? So they currently make 8 million a year, right? What is the company valued at? 216 million. 216 million. This company makes 8 million a year, and it's at 216 million. Oh my goodness, that is unbelievable. That is unbelievable. I mean, you might say Beyond Meat has a bit of an expensive valuation on it, but look at that. That is a bonkers valuation. The thing is, you look at this now and you think it's at 52-week lows. Imagine the valuation back here. That's absolutely bonkers. And a few people say, well, why are they raising capital at 52-week lows? What's the point of doing it? Well, first of all, they need money, because if they don't have money, they're pretty much going to go bankrupt in the next 12 months. And as well as they needing the money, yeah, it might be at 52-week lows, but the thing is this valuation is still ridiculously high. This company should be half of where it is at least. This is at least should be a below a $1 stock, at least below $1 stock. So this valuation is still massively overvalued at these sort of valuations, which is absolutely bonkers. So you can see here you've got a company that is willing to dilute shareholders. As well as diluting shareholders, they're moving into countries that they shouldn't even move into because they haven't even built up a proper business in the US yet. And as well as that, they've got a horrible balance sheet, and what's going to happen is the more they keep making money, the more they keep losing money. They've got no cash on the balance sheet to keep doing it. It's an awful circle to be in. This is a company that is just screaming, do not touch it. It's a company that it's just not a successful, at the moment how the business is operating is just not successful. It's just burning through money. Every time it makes more money, it burns through more money. The balance sheet is awful. It's not sustainable because it hasn't got enough cash in it, and it's just going to keep diluting shareholders because you know what's going to happen in the next 12 months? They're going to make more revenue. They're going to lose more money. They'll lose more money. They've got no money on the balance sheet, and as well as that, they want to keep expanding to China. It's just an awful cycle to be in. So first of all, we're not even at the worst bit just yet. So first of all, from a fundamental point of view, it is a horrible stock. It is one of the worst financial companies that I have seen for a long time, for a long time. So, I mean, that's bad enough as it is. But the reason why this is one of the worst stocks, the likes of Lordstown Motors, the likes of Workhorse, why it's up with them sort of things, is that what this company also has a history of doing it, and it's not even a history, it's even been going on to this point right now, is this company actually invests cash or capital to invest into YouTube channels. It pays YouTube channels to promote the stock. And there's evidence from Sven Carlin, who I think was approached by them to promote the stock, and also recently another YouTube channel here.
In this video here, we're going to be doing an update on the vegan stock, meatless stock that I own, the Very Good Food Company. I've actually invested another $10,000 into this stock, buying the dip personally, and I'm going to be sharing with you guys why I am doing that, as well as some possible reasons why we are seeing a dip in the first place with this particular stock. Also guys, this video is sponsored by the Very Good Food Company. However, that does not in any way influence my thoughts or feelings on this company.
Which, as you can see, is paid to promote the stock, and I can never get this. I can never get the point of view is like, oh yeah, I'm being paid by the stock, but I'm going to be giving my honest opinion on it. Like, come on, you know, it's not going to happen, is it? So the fact that they, as well as a company, are spending capital on to promote the stock on YouTube is a massive red flag. We've seen it with the likes of Lordstown Motors. We've seen it with the likes of Workhorse. The thing is it's just not good. It's not good. I don't like that. I don't like a multi-million-dollar company, nearly potentially at one point was $1 billion company, a $1 billion company that spends their capital or their time interviewing or working to promote a stock price. Like, your financials are bad enough already. Sort your company out. Your company is nearly $1 billion company. Why are you doing that? Focus on your company, where your company is going to be in the long run. That is where your game plan should be. Not spending your budget and capital on promoting a stock price. What is the point of promoting your stock and your stock price? That's got nothing to do with it. Sure, investors might want to see the stock price doing well, I guess, but that will come in the long run. If your business starts performing, your share price will come back in the long run, and that's what you should focus on. And when you are investing them sort of shady investments into promoting your stock price, you start thinking, well, obviously that is to dilute shareholders. Is it potentially to raise the stock price, as well as diluting shareholders for personal insider gain and for insiders to potentially sell shares out at a better price? We've seen that with the likes of Workhorse, with the likes of Lordstown Motors. It's just not good. So we've got a terrible company here, a terrible company that is performing fundamentally bad, but just to top that off, to be involved in that kind of promoting your stock through YouTube, awful. For me, that's awful. I would never invest into a company that does something like that. So yeah, from that point of view, yeah, it is one of the worst stocks I've seen for a while, and with a few people that have been asking me what are my thoughts on it. Personally, for me, my opinion, would not touch it. There is probably nearly every single stock in the stock market I would probably touch before this one, and even though it's on a dip, the reason why it's on a dip is because it is being massively overvalued. It's not performing. Its financials are terrible. Its balance sheet is terrible, and also it's got management that are doing actions that I think aren't great. And I don't want my money going into that investment. I do not want to buy stock or shares in a company that is using capital rather than investing into the company, investing that into as well promoting the share price. So yeah, I mean, for me, yeah, one to avoid, not one for me to touch. One of the worst stocks I've seen for a long time. So for yeah, you guys want to see that, I hope it was useful. If it was, hit the like button. Let me know your thoughts on this in the comment section as well, and I'll see you in the next video.